happened yesterday with Jerome Powell and the whole money printing inflation situation and interest rate hikes. We're going to get to all of it. And good morning to everyone who's here right now. So let's start off taking a look at some of the charts. Good morning, Kitchener. I think I saw you in the chat. Good morning, Rocky Mountain Gobbler, Shadow Girl, Pexi. What's up, guys? Good morning. Hopefully you've got something to drink this morning. Hopefully I have some tea with me. I've been trying to get off the caffeine a little bit, right? Lower my caffeine intake, so I've been doing tea lately. So it's just tea for me. No more instant coffee. But the S&P is actually not doing that bad. In fact, we're above where we closed, right? So we had a kind of cruddy day towards the end of the day as Powell started talking. The S&P started tanking pretty much as soon as he came on, right? We had a little bit of volatility beforehand. And then as he started talking, we just tanked, right? The whole market went down pretty much. Everything that was green, for the most part, turned red, right? So afterwards, right, the aftermarket, we started to get a little bit of recovery and then dipped down. And today in the pre-market, we've actually been getting pretty good stuff, right? We've been moving up. And part of that may be because, let me see if I can pull this up, because we got GDP numbers. So GDP grew at 6.9%. To close out 2021, stronger than expected despite the spread of the new variant. So all in all, the economy was still growing pretty good, right? After the pandemic, things weren't looking too good. We definitely shrunk the economy quite a bit when we entered those lockdowns, and everything was shut down. People weren't doing anything. They weren't leaving their houses. They weren't buying anything or providing any services. So there's still definitely some room to grow in the GDP. And and let's see what we've got. The stream's bit rate is low, so hopefully it's coming through okay. But over the course of 2020 and 2021, Powell was a busy guy, right? He was printing money left and right, throwing it out, and Wall Street and Main Street loved him, right? Retail investors were up, institutional investors were up, everything. I mean, you could pretty much throw a dart at a wall covered in stock ticker symbols, and you were going to hit something that was probably going up if you were investing towards the end of 2020, right? Or the beginning of 2021. I mean, pretty much everything was rising. There was very little risk of losing money unless you were a short, right? That's when shorts were getting crushed, right? Everyone who had been shorting the market expecting that the pandemic was going to take a big toll on it, they got decimated during the course of 2021. During the beginning of 2021, right? That's when the whole AMC thing happened, and when a lot of stocks actually pumped. And a lot of it is thanks to Powell, right? It's because he injected so much money into the system. He just kept shooting it out of these money guns. And people certainly liked that, right? They loved all this extra money, but they loved it a little bit too much. And stocks maybe went a little bit too high, in Powell's opinion, right? And part of this is because 80% of all U.S. dollars were printed in the last 22 months. And this was posted, a couple months ago. So now, over the past 2 years, so 24 months, 80% of all U.S. dollars were printed. So Powell realizes, now that he sees some of these numbers coming out for inflation, that maybe there was a little bit too much money printing going on. Maybe he went a little bit too hard with those money guns. Maybe he should have cut it off a little bit sooner. And that's kind of the vibe that he was giving in this speech that he gave yesterday, in this press conference. He was kind of hinting that, the recovery, though incredible, was maybe a little bit heavy-handed, right? He was maybe a little bit heavy-handed when he was rolling that printing machine. And you can tell that that's the case, right? He knows that's the case because he's looking at the inflation rate. And he sees that these numbers are just going up and up, that we're just seeing more and more inflation as time goes on. And in fact, if you pull this out to the 25-year chart, we're seeing more inflation than we have in the past 25 years. And that is definitely scaring Powell. Now, from his perspective, right, he's done a couple of things, right? He's printed all of this money, and he saved the stock market, right? Because the stock market was not looking good towards the beginning of 2020 when the pandemic was first hitting and all those lockdowns were ensuing. The stock market was not looking good. We were basically just in free fall until Powell turned on that printer and started plowing money into the system, right? Also, we got the CARES Act and whatnot, and that certainly helped too. But a lot of it was Powell just plowing money into the system. Now, that's what he's done, right? He's printed a ton of money. and also boosted up the stock market. So those are his accomplishments, right? He's responsible for saving the stock market, but also responsible for all of this inflation that we're seeing. So he has now a choice to make, right? He has to decide what to do to curb this inflation. He has to decide how to curb it and how harsh to be, how hawkish to be. And he doesn't want to do it too hard, right? Because he realizes the stock market is in a little bit of a tenuous position right now. The stock market has been falling ever since these rate hikes were hinted at and became a distinct possibility. And in fact, the stock market, from its highs to its lows, has fallen a pretty significant amount. About 12.5% is what the S&P overall has fallen since we really started worrying about these interest rate hikes. So Powell certainly doesn't want to crash the stock market, right? Because that is his actual big accomplishment. He saved the stock market. And if he then proceeded to do things that would crash it, well, then you have to ask, what did Powell do for us, right? He printed all that money, and then a year later, he crashes the stock market, and you have to wonder, what good is he, right? Is that the legacy that he wants to leave behind of creating a massive inflation situation and then crashing the stock market? I don't think so. I think that he would be a poorly remembered head of the Fed if that's all he accomplished. So he's kind of walking a very tricky path, right? He doesn't want to crash the stock market, but he also realizes that this inflation risk is serious, right? He said it in his press conference yesterday. He said that it was a high-profile, serious risk to the economy, and he's right. Because if we do see a lot of inflation, that's going to have detrimental effects on pretty much everybody, right? Nobody wants to see their dollars becoming worth less. Pretty much everybody has cash, right? Everyone has some amount of cash. And that would also create a lot of fear around holding the US dollar. Now, we're going to look at a crazy record that the dollar has been breaking. We'll pull up the dollar real quick to this top right chart right here. And you can see the dollar has actually been on a tear lately, right? Especially after Powell started talking yesterday. It just started shooting up. So if you actually look at the past year, the dollar is at all-time highs for the past year. Absolutely insane stuff, right? And this is despite all the money printing that went on over the past couple of years, right? Despite the fact that 80% of dollars were printed over the course of the last 24 months. So really insane that we're reaching record highs for the dollar just on news that Powell is being a little bit more hawkish, right? The fact that Powell's going to fight inflation, that he's taking it seriously, is what's pumping this dollar up. It's almost unbelievable to see that the dollar is reaching these record highs because, I mean, what's Powell really going to do, right? If you think about it, why would the stock market crash and why would the dollar be up so much based on the news that Powell is going to maybe raise rates 4 times in March? And some people are saying maybe he'll raise them 5 times. And not just in March, but over the course of this year, right? And what would that really look like? Well, maybe you'd be getting a 1% interest rate. What is that, right? Why does that cause the stock market to move down 12%? I mean, what kind of economy have we built? What kind of economy has Powell built where the fear that interest rates might go up to 1% or even, worst case scenario, maybe it goes up to 2%, 3%? What kind of economy is that where that crashes the stock market by 12.5% and where the dollar skyrockets, right? Why is the dollar skyrocketing when we have all of these real inflation fears and just on the news that Powell is going to try to combat them? I mean, we're really living in a crazy time, right? Gold, if you look at it, is actually not doing too good on this whole Fed meeting, right? The Fed meeting happened right around here. And once Powell started talking, gold started tanking. So people are certainly placing their bets, and they're placing them on Powell, right? They're betting that Powell is going to be able to fight inflation, and they're betting that he's going to do whatever is necessary. Now, hopefully, he gets the situation under control because nobody wants to see their bank accounts, they don't want to see themselves having the same amount of money in their bank accounts, but being unable to buy more products. So obviously, nobody wants inflation, right? Hopefully, Powell can deal with that situation, but hopefully, he can also deal with it in a way that doesn't have a very detrimental effect on the stock market. Now, stocks are recovering a bit. It looks like we're going to open the day green. I'm very hopeful for that. Once again, for those of you who missed it, the first thing that we talked about was actually that GDP grew at 6.9%, pace to close out 2021. So stronger than expected, despite the whole new variant spreading around. So all in all, the economy's not looking half bad, right? We can pull up some other numbers for that in a second. And part of what Powell was saying, and part of why the economy isn't looking too bad right now, is that unemployment is relatively low, right? So we have a chart from the past, 20-ish years. I think this is a 20-year chart of the civilian unemployment rate, and a lot of people, I will say, do take issue with the unemployment rate, right? They think that it's kind of, the numbers are fudged, they're not quite real. There's probably some of that, right? There's certainly some people who aren't counted in the unemployment rate, but for the most part, this is giving us a broad overview of what's going on unemployment-wise. So you can see that in 2008, we rose dramatically, and since then, we were on a slow but steady decline until around 2020, pandemic hit, and we just shot up to new records. I mean, it was crazy how rapidly unemployment rose just because of all those lockdowns and shutdowns and a lot of the fear that people had. Some people probably quit their jobs, right? They probably quit their jobs if they didn't get locked down because they just didn't want to go out. A lot of people were very fearful during those first couple of months. So unemployment shot up dramatically. But then, once again, we had a very sharp decline in unemployment because as things opened back up, it's not like those jobs were permanently destroyed. The government and Powell, they were printing a lot, and they were handing out a lot of money. They were supporting those businesses throughout the shutdowns for the most part. Some businesses maybe didn't get the help they needed. Some probably never reopened. A lot probably never reopened. We'll look that up in a second. But we did have a very steep decline in the unemployment rate. Now we're back down to 3.9%, which is pretty darn close to where we were before, right? Before the December before the whole pandemic shot up the unemployment rate, but we were at 3.6%, and now we're at 3.9%, so we're pretty darn close. We've gotten unemployment down pretty far. And a lot of what Powell's talking about is he wants to keep the unemployment rate low, and part of what he's saying is he loves this big expansion that we've been on, right? He loves that the stock market's been moving up and up and up, and it's a great thing, right? He is responsible for it, right? He's printed all this money that's allowed for this massive expansion in the stock market, and people love to see it, right? They love it when they're holding these assets that move up in price. Now, what they don't love is when their dollars become worth less because there's so many dollars in circulation and whatnot. But that's a side effect, that Powell's trying to deal with now, right? He loves this big expansion, and he doesn't want it to end because this is his legacy at the end of the day, right? This is what he was able to do. And if he proceeds to crash the stock market trying to fight inflation, then he probably won't be remembered very kindly, right? So overall, what he's saying, at least what he was saying at this last Fed meeting, is he's trying to maintain this big expansion, right? He doesn't want inflation to get in the way. And he realizes that inflation is becoming a bit of a problem, but he's going to do what he can to fight inflation, to maintain, to the extent that he can maintain this big expansion, which overall sounds pretty good, right? He's going to try to keep unemployment low. He realizes that if inflation shoots up, then some businesses are going to have trouble. Some people are going to be cut off from their work, and unemployment could rise. He's going to try to keep inflation under control, to keep unemployment low, and to keep this expansion going. So he's essentially saying, way back in 2020, we printed a ton of money, and that allowed for a big party to go on, right? A big party happened in the stock market. Everybody was making money, and it was funded by this big printing that went on. And he's saying that, maybe a little bit too much got printed. Maybe it's causing some other issues, and maybe that needs to be dealt with because those issues could affect the party that's going on in the stock market. Now, obviously, right, if imagine you're at a party, right, and there's a punch bowl. This is an analogy. Imagine you're at a party and there's a punch bowl. The punch bowl is all this money that's been getting printed. And Jerome Powell just keeps filling this punch bowl up so that the party can keep raging on. Well, eventually, some of the people around the punch bowl get a little bit too drunk, and they spill some of the punch on the floor. Now there's this mess at the party, and the party, nobody's happy with it. So Powell's basically coming in with his wipe, and he's wiping away all the punch that's spilt around the punch bowl. And, in the meantime, it's kind of lame to see this guy in a suit come and start cleaning up at this party that you're at. So maybe the party dies down a little bit temporarily, right? Maybe it dies down a little bit while Powell's cleaning up this mess. And then maybe once he's done, the punch bowl gets some juice filled back up into it. Maybe not enough so that there's another spill, but the party can continue raging on and continuing. So hopefully that's the situation that we're looking at, right? That's what Powell is trying to paint this picture as. He's essentially trying to say that inflation was a big problem, is a big problem, and he's going to deal with it. It might cause a little bit of pain in the short term, but over the long term, he thinks it's the right thing to do to continue this big expansion that we're looking at in the market. So we'll see if that ends up being the case. Hopefully he can stop the decline in stocks and the rise in inflation simultaneously, right? Hopefully he's going to be capable of doing that. We'll see, right? He's done great stuff for the market in the past. He's done it, at the expense of printing a lot of money, and we're going to see what he can do. Hopefully he'll be able to do it. But in other news, we do have some word on the Russia-Ukraine situation. We're going to talk about that in just a second. But I will say good morning to everybody in the chat. Good morning, Maria, Vivi, Rich M, Shadow Girl. I think I caught you earlier, and Mark. Good morning, everybody. So welcome. But we do have some news on the Russia-Ukraine situation, right? So currently, what we're looking at is a situation where Russia is on the border of the Ukraine, right? They have a bunch of troops on the border, and they're saying it's just a military exercise, right? We're not going to be invading Ukraine, right? They're saying it's just a military exercise. They're just, they've got 100,000 troops on the border just for fun. And maybe they're to be believed, but, NATO and the U.S. don't trust them that much, right? They think that Putin has some other ideas about what he'd like to do in the Ukraine, right? So Ukraine is a little bit worried about it. The U.S. is worried about it. NATO's worried about it. And apparently, Russia has some demands, right? So it makes you wonder, why does Russia have demands if they're just doing a military exercise on the border of Ukraine? I mean, what kind of demands could they have? And what are they threatening, if the U.S. and NATO don't meet these demands? So here's a quick little tidbit from Twitter, right? The U.S. makes no concessions on Ukraine after Russia threatens retaliation over unmet demands. So what we've been seeing lately is the United States has some troops on alert, ready to go into Ukraine. NATO's also sent some fighter jets and ships east to the Ukraine area, right? Just in case Russia ends up invading. So basically, tensions continue to mount on Wednesday as fears of a Russian invasion of Ukraine persist globally. Russia has denied it is planning to invade despite massing an estimated 100,000 troops along the border. So here's the latest news, right? The U.S. Secretary of State said that the U.S. made no concessions, but is open to dialogue in response to Russia's demands for the U.S. and its allies to curb preparation for an invasion, and for the Ukraine and other ex-Soviet nations to be denied entry to NATO. So Russia really doesn't want, these other nations, these small nations that are close to it. I'll try to pull up a map. I'll pull up a little map of the ex-Soviet states and whatnot right here. This should be a good one, hopefully. So I think this is it right here. So I'll open this in a new tab for you guys. All right. So here's a map. Just for those of you who don't know, I believe that, we've got Russia right here. And then all of these red areas used to be part of the Soviet Union, if I'm not mistaken. So essentially, the Soviet Union collapsed. All these other countries were created. And Russia kind of wants those back, right? Putin was around for the days when the Soviet Union was active. In fact, if I'm not mistaken, I believe he was the president of the secret police of the Soviet Union. I don't know about that. Don't quote me on it, but I believe that was the case. Now he's the president of Russia or whatever it is, whatever the title is. And basically, he remembers the days when the Soviet Union was controlling all of this land. And some people speculate that he wants all of this land back. And a lot of the time, he'll put troops on the border of Ukraine, and that really scares Ukraine. But the one thing that he really doesn't want is for these countries to become members of NATO, right? Because if these countries become members of NATO, then that's going to mean that if he's invading them, then there's a direct treaty and whatnot, an alliance of some sort that's going to obligate the United States and all the other countries in NATO, a lot of European countries, to go to war with Russia. So the last thing they want is for these countries to become part of NATO, right? They also just don't happen to get along with NATO because NATO was originally created for the most part to deal with the rise of communism in the East and to combat the Soviet Union. So Russia certainly doesn't like that. Now, what we've got going on now is Russia's potentially going to try to take Ukraine, and they have some demands that the U.S. don't prepare to stop them, or NATO, right? They don't want the U.S. or NATO to prepare to stop them if they decide to, and they don't want any of the ex-Soviet nations to be in NATO, right? They want them to be denied entrance, even though I'm sure a lot of those nations might like to be in NATO, right? They'd have some extra protection because Ukraine is actually pretty worried. People in Ukraine are pretty fearful of an invasion. I mean, obviously anybody would if you had a foreign nation amassing 100,000 troops along your border. It certainly looks like the kind of situation where they could be marching in and bad things happen during war, right? People get killed, buildings get destroyed, wealth is annihilated. So Ukrainian leaders are currently trying to calm those living in the country by reassuring them that while the threat of Russian invasion is real, it is not imminent. So hopefully that really is the case, because obviously that would be horrible for the stock market, right? If we actually had real threat of a war with Russia, that could decimate the stock market, right? Way more than the fear of interest rates rising by 1 or 2%, right? I mean, if you think about it, what really is a 1 or 2% rise in interest rates? It really shouldn't be that big of a killer to the stock market, as long as this thing isn't a whole house of cards, which some people think it is, and maybe it is. But this would be the equivalence of a real threat, right? A real war going on. If the United States and Russia really started to fight it out in Ukraine, that could cause some damage to the stock market. So we also have a very, very brief story just about what's going on in Ukraine, right? Just a nothing story, really, but kind of a scary thing. Ukrainian soldier kills 5 in shooting rampage at military factory. Just thought it was interesting, just because it is a kind of high-tension situation. They couldn't figure out why this guy did it, right? They're going to launch an investigation into this, but 5 people were shot and another 5 were injured when a Ukrainian soldier opened fire at a military plant, says the country's interior ministry. So they're going to look into this. They couldn't figure out why he did it, but he is detained, I believe. And that's the situation in Ukraine. A lot of stress there. Who knows what happened with that situation, right? Why he did it. But they're going to launch an investigation. Fortunately, it didn't cause any further shootings or anything that we've heard of so far. But there is another story that I kind of wanted to pull up. Maybe I'll wait to pull it up until the market's been open for a little bit. It looks like we're continuing to see some green in the markets. It's a bit of a free speech story. For those of you who follow Joe Rogan, you might be well versed in the background of this story, but I'll cover that anyways. But we'll hold off on that. In the meantime, Kitchener Leslie asks, Rob, why is the sky blue? Can't quite say. I have a friend who would know the answer, but I'm sure it has something to do with the chemical composition of the atmosphere. Something like that. But let's see. So, yeah, Silver says Spotify, Neil Diamond. That's the one. We'll cover that. We'll talk about it now. We've got a decent number of people here, and I'm sure that everyone is interested in it. So, for those of you who don't know, Joe Rogan, biggest podcaster in the world. I'm a personal big fan of his. I listened to his podcast just earlier this morning with Jordan Peterson. But basically, I won't pull this up yet. Basically, what's been going on with Joe Rogan is he signed a deal with Spotify to make his podcasts exclusively available there. Now, according to the deal and whatnot, he's still going to maintain control over what he puts out, and Spotify isn't supposed to censor him or do anything like that. I believe, right? He got paid $100 million for this deal, so $100 million just to move his podcast to Spotify and retain all control of it. And I believe, if I'm not mistaken, he has outs, right, in the contract, right? He has a way to get out if Spotify starts messing with him and screwing him over. So what's happened recently is he's had on a bunch of doctors who who talk about vaccines and whatnot. And we can't talk too much about it on the channel here, but basically a lot of people disagree with what these doctors are saying on Joe Rogan, and a lot of people don't want them to be able to say what they're saying on Joe Rogan's podcast. And one of those people is Neil Young, who I personally haven't heard of, but I believe he's a big musician. I'm sure, if he's big enough to be in the headline like this, that I'm sure I've heard one of his songs or something. I just don't know. But he wants either for Spotify to censor and get rid of Joe Rogan's podcast with what they're saying. Well, I'll read the article right here. After Neil Young published an open letter saying Spotify needed to either deal with vaccine misinformation on Joe Rogan's podcast or remove his music. So either Neil Young wants vaccine misinformation on Joe Rogan's podcast to be removed, and it's what he's viewing as vaccine misinformation. I don't know anything about medicine, but Neil Young doesn't like what was said on this podcast, and he wants either the podcast to be removed or he wants his music off of Spotify. So Neil Young is a musician, I assume a prestigious one, and the platform, Spotify, is in the process of removing his catalog. So it looks like Spotify sided with Joe Rogan. They decided that they weren't going to censor him, and that Neil Young, if he wants his music off, then that's his choice to make. So Neil Young's music going bye-bye from Spotify, and Joe Rogan's podcasts will remain listed. So Rocky Mountain Gobbler said, "You've not heard of Neil Young? You're too young." You know what? I'm going to look up one of his songs and see. And we certainly can't play it here, but let's just search Neil Young popular songs, and maybe I'll recognize a title. Oh boy, this stuff's all from the 70s. Yeah, no, I don't know about this. I don't know about this. I probably don't recognize any of his music, but I will say that this is certainly bringing up Neil Young quite a bit back into the public eye. In fact, if you look up Neil Young, the top 6 articles, I'll pull it up right here, they're all about the Spotify situation, right? And they all came out pretty recently. So, yeah, it's certainly been good maybe for his brand. Maybe a lot of people are going to flock to his music and listen to it. A lot of people are probably going to continue listening to Joe Rogan too. So it's an interesting situation. And I'm certainly happy that, there will be more access to Joe Rogan's podcasts, because I like them quite a bit. And NJ says, letting Rogan go would be a huge business mistake, and they know it. It certainly would, I think. I mean, they made a big deal with him, $100 million. And $100 million, that's a lot to lose, right? I believe that Joe Rogan would be able to keep that, and that they'd lose him, and boy, oh boy, would that be a big mistake, because I certainly listen to a whole lot more Spotify than I used to, right? I mean, now that Joe Rogan's on it, there's no chance I'm canceling it. I think it's worth the subscription fee alone just to be able to listen to him. So Spotify has definitely benefited greatly, probably, from having Joe Rogan on the platform, and will probably continue to benefit greatly. So hopefully they'll continue to support him. I know that this has been a big issue on Twitter and on Instagram, and let me try to pull this up, and then we'll stop talking about it, and we'll get back to the stock market. I know that's what you guys really want. So we'll pull up. Let's see if we can pull up Lex Fridman. I'll just briefly show this. So this is an Instagram post from Lex Fridman, however you say it. He's on the Joe Rogan Experience every now and then. He has a big podcast of his own where he talks more about sciencey topics. I don't listen to it as much. Every now and then I'll give it a listen. But he said, Spotify not caving under pressure to censor is admirable and important. And I completely agree. So you said it best, Lex. Good job, man. If anyone doesn't know about Lex, I follow him. So, he's got 500,000 followers, and I think he's a good guy, so it might be worth checking out, right? He has some Joe Rogan podcasts, and it looks like we're about to get the market open. So we just started the day, and it looks like the S&P is up 1%. So after that really negative day that we had yesterday, after Powell started talking, it looks like we're finally getting some love in the markets, right? The markets are finally turning a little bit green again. It only took less than 24 hours, so there really wasn't that long to be fearful, but I'm sure a lot of people saw this big dip, and a lot of people probably decided to sell. A lot of people probably decided to short. They might have thought there'd be a continuation. But it looks like the markets might be recovering. So really cool stuff. Now, people should check the something test. I saw 2 videos in it. Oh, what test was contaminated? I wasn't aware. Says Vivi. So read Vivi's comment if you're curious about what I'm talking about. People should check the pandemic tests. I saw 2 videos that it shows swab was contaminated. Interesting. I don't know in which ones or under what circumstance you're talking about. I'm not sure about what that story is, but that sounds interesting. Yeah, I've heard there's sometimes tests aren't too accurate. I've heard there's a lot of inaccurateness with the tests sometimes. So we won't delve too much into it. But it looks like Smile Direct Club is having a green day along with the markets. This is a play that I'm in right now. Got in pretty cheap. Got in close to $2. So we're gonna see how high this one can ride. I'm excited for SDC, Smile Direct Club, but also for Sundial, right? Sundial's green too. This latest dip, I mean, it's just making these stocks look so juicy, right? If you look at this, from where they've dipped, they've just gotten so low, and this really might have been the bottom. Maybe it is, right? 40 cents just seems insane for Sundial, right? They've got so much on their balance sheet that they're almost, I believe, still, unless their investments have really fallen a lot, which would be understandable, right? The market's fallen quite a bit, but at least as of a month or 2 ago, their investments gave them a book value of 55 cents per share. So it seems crazy that they're trading below that, but obviously the markets are down. It's kind of understandable. Their investments are probably worth a little bit less right now, so somewhat understandable. But it looks like we can zoom in on the daily or on the minute chart of the S&P. It looks like we're deciding whether or not we're going to be green or red today. Tesla is dumping, says Greg Taylor. So we'll pull up Tesla. It looks like DWAC just broke through $70. What else is new? It keeps playing with $70 over the past couple of days. It's been playing there. So we'll see what happens. It's currently deciding where to go. But the markets are turning green. Really good stuff. And the dollar looks like it peaked out around 97.26 and has been moving down a little bit since. Now, nobody wants to see the dollar crash, right? Unless you're holding gold. So I guess I might. But it's doing pretty good, right? I'm also holding some cash, so I'm fine either way, right? I'm hedging my bets. So DWAC we'll replace with Tesla real quick, just to see what's going on with Tesla. So Tesla, yeah, it's tanking down 2%. Now, very fortunate for them, they did not break below $900, right? It looked like they were going to on their earnings call, right? Their earnings started coming out, and boom, big red bars and a nice rebound, right? Back above 900. So, I mean, people say TA doesn't work, right? They bash technical analysis, but I mean, look at this. Look, we'll pull out the 2-year. I mean, do you guys think that it's a coincidence that 900 was the peak back in the beginning of 2021, and now it's bounced off of 900 twice, and even yesterday it used 900 as a support? I mean, people bash TA, but it absolutely works. I mean, it's almost undeniable. It doesn't work every time, but there are certainly these psychological levels that people build into their heads, and that people, because they're trading psychologically, the algorithms start reacting to it too. When they see big price movements around certain levels, they learn to respect them. So I think TA, I think it's really cool. And a lot of people, they like to bash it, the long-term investors, which I believe in investing over the long term as well. I believe in, using whatever you can to make as much money as possible. But the long-term investors really like to bash TA. And they say, oh, it's a scam, it's fake, it doesn't work. But how can you deny it when you look at this chart and it's just so clear, right, that this top line that we've got right here is acting as a resistance right there. And because it acted as resistance in the past, it's now acting as a support. I mean, why else would it be bouncing off of these levels multiple times, right? And the same thing with, DWAC. We've seen it with DWAC also. And Zach Taylor says, is anyone else sensing a massive market crash is inevitable, or is it just me? Maybe, right? It's possible. it's possible. The thing is, there's just so much cash. I mean, what's the market going to crash in terms of? I mean, maybe it could crash in terms of gold. Uh, but I mean, are we really going to crash in terms of cash when 80% of the cash was made in the past 2 years? I mean, I know we're up big, uh, but we're not up 5x. You know, it seems tough to really think that the markets are. I mean, you know, look, it's a very steep chart. Don't get me wrong. Some of it's fundamental growth, right? We've certainly, you know, a lot of companies really have made big acquisitions and become more valuable to people over the past 5 years, right? A lot of the tech companies have made big innovations. You know, a lot of retail companies that have physical investments. You know, they've opened up new stores, opened up new areas, whatever it is, gotten new patents, whatever. So a lot of the growth over the past 5 years in the S&P is fundamental, right? Some of it is probably just because a lot of cash got printed, right? Ever since early 2020, a lot of cash got printed, but the cash doesn't cease to exist, right? Just because somebody buys up a stock with it, it's not like they're throwing that cash into an abyss. They're handing it to somebody else, and then that person has the cash. So, I mean, how far can stocks really fall now that there's all this cash in the system? I mean, 80% of dollars were printed last 24 months, you know, and we're tracking the prices of these stocks in dollars. I don't know. I mean, maybe it'll crash in terms of how many loaves of bread you can buy with the money in a share of SPY, right? Maybe if you sell a share of SPY, you can still sell it for more dollars, but you can't buy as much bread with it. But it's just a tough situation for me to fathom the market's really tanking. You know, we just got so much cash. There's there's no shortage of it. And everyone knows, you know, everyone's seen the charts over the long term of how the S&P performs. Let's pull this up. I think that a big thing that's affecting the prices of stocks is the internet. Now, for reasons different than what you might think, and I'll explain that in a second. Let me just pull up the average return for the S&P. So let's find it right here. If Investopedia has it. Okay, so average annual return for the S&P 500. Since its inception in 1926 through 2021, it's 10.5%. So, you know, 10.5%, pretty good interest rate to be getting, right? That's protecting you from the inflation that we've seen. That's protecting you from quite a bit. And we can pull up a compound interest calculator. And, you know, say you've got 10 grand. People are able to actually pull up these tools now and actually, you know, hear people say that the S&P goes up on average XYZ amount, right? They're not just. I'll explain this first. So, you know, over the long term, since I think the internet's really come into existence, people have started to realize on a much more wide scale that the markets are accessible, right? You can just download an app on your phone. I think we've got a lot more people investing nowadays, now that you can just download Robinhood or Webull or whatever it is, and start throwing money into the markets. But people have also started realizing that the markets aren't a scam, right? Way back when, you know, you'd have really good years in the S&P, and some people might read about it in the papers and decide to get in, and then the next year you'd have the Great Depression, and that would ward people off, right? They'd see, oh, shoot, I just lost, you know, 80% of my money. And they don't want that. So they end up dumping all of their stocks, and they never get invested in the market again because they only have that one memory of it. And, you know, no one can convince them, you know, just by saying, oh, no, I'm in the market and I'm making money. No one's going to convince those people who lost, you know, 80% of their wealth in a depression or a huge recession to get back in the market, right? But when you can actually look at the charts and look at a site that just says, hey, on average, you know, if you just buy and hold, you get 10.5% over the course of, you know, 80, 90 years, whatever it is, 100 years. Well, that's pretty tough to argue with. And when you actually start to look at what 10% could give you, if you pull out a compound interest calculator, maybe you've got 10 grand, maybe you keep putting in, you know, $250 a month, and you know, hold it for the course of 40 years if you're young, at 10.5%. I don't know if we can do 10.5 in here, and you calculate that, and then you've got, you know, $2 million to retire on. Now that you have access to this compound interest calculator on the internet, you know, you look at that and you say, well, why not? Why not put in 10 grand now and $250 a month? You know, I spend more than that on food or whatever it is. My car payment might cost more than $250 a month. I may as well put that in the market too and turn it into 2 million over the course of 40 years and not even outperforming the market, just, buying and holding through depressions and recessions and all that, not trying to time it or anything. So I think a lot of people are realizing that. We're getting a lot of more people in the market, and the dips, I personally think, right, it's a mixture of people realizing if you just buy the dips and hold over the long term, you're pretty golden, as well as people just having a whole lot more cash. There's just so much more cash in the system that, the cash, unfortunately, didn't go to the everyday people, right? It didn't go to you and me. And Zach Taylor said something. So I'll explain this first. So the cash didn't go to you and I. It went to the millionaires and the billionaires. And that's why we saw stock prices go up so much, right? Because they're putting their money in stocks. We're starting to see it kind of impact, relatively decently the inflation rate, right? Because these are the things that you and I are buying that's measured in inflation. But if they were counting asset prices in inflation, these things would be through the roof, because look at how expensive assets have gotten since all this printing started. It's just been a straight shot up, until now, right? Until we're on this most recent dip. But I mean, if they counted asset prices in, asset prices rose from the pit of the pandemic to here over 100%. If you just look at the market, so the wealthy are the ones investing. All that extra money that was printed, they're the ones who've got it. And they're just pouring it into the markets and trading it back and forth. And whenever there's a dip, some of them buy it up. They buy up the big companies that they like, the Microsofts and the Apples. So Zach Teller says the economic growth was created by government spending. Now the government spending is stopped. The cover over the hole is being removed, and the Fed is raising interest rates. Yes, they are raising interest rates. And Zach Taylor says, what is the cash backed by? It's backed by nothing. But if you're looking at the stock price, it's in terms of cash. So, if they printed, $1 zillion and poured it into the market, stock prices would go up again. And maybe gold prices would go up even more, right? You might not be able to trade your share of SPY for as many bars of gold as you could, but you'd still have a whole lot more cash, right? It would still be worth a lot more cash. So in terms of a market crash, I mean, looking at the S&P chart, this is a chart tracking it in terms of dollars, and there's just so many more dollars. And although the Fed is raising interest rates, there's still the dollars out there, right? There's still the dollars in the system. So, 80% of the dollars were made in the last 24 months. Those dollars, it's not like they disappear when people buy stocks. They're still out there. People still have those. Some people are holding cash, hoping that, the stock market dips a little bit more, but they've got the cash so that they can buy up stocks. So how far will they really let it fall before, someone gets greedy? It's not like it's all in one person's hand. There's a couple rich people out there with billions and billions of dollars worth of cash, and they're ready to take control of these big companies whenever they see the chance. So Kitchen Leslie says, Rob, you were on the front page of Rumble yesterday. Oh yeah, we've been on the front page of Rumble a couple of times. Look at this. We're on it right now, actually. We'll pull up Rumble right here. We're on the streams right here. So if you're watching on Rumble, thank you very much. We got 16 people right there. And we've also got the Jerome Powell Speaks Today video second on the finance thing. So thank you guys very much. I appreciate the Rumble support. Feel free to throw a Rumble in. And feel free to like the stream on YouTube also. But I love Rumble, man. I am a huge fan of Rumble. Really good stuff that they're doing there. We're going to start up a locals page also. Locals is owned by Rumble. We're going to start up a page there too. So Zach Taylor says exactly. Yeah, the cash backed by Zippo. Nothing's backing this cash. But it doesn't stop the market from going up in terms of cash, right? I mean, at the end of the day, if the cash is backed by nothing, I'd rather, spend all that cash buying up stocks that, at least I own part of a building or whatever building the companies are based in, right? If I'm buying up Apple stock, at least I'm, owning part of their headquarters and part of whatever iPhone inventory they've got instead of just cash, right? So I don't think the markets are going to crash. The dollar, on the other hand, that one probably should be moving a bit lower, right? I would expect to see the dollar moving lower now that all this cash is in hand. But, I mean, the markets, some of the best performing stock markets in the world are ones that are in countries that are experiencing hyperinflation because people just want to buy anything other than hold that cash. So if we're really going into a hyperinflation environment, then yeah, the markets I'll point this out, right? The markets should technically be shooting up in terms of cash value, but it's not actually the best thing to have, right? Because in terms of everything else, you're actually losing money, right? Because you can sell that stock or whatever, it's worth more cash, but you can't buy as much stuff with it. So Zach Taylor says this is the mother of all bubbles. Mark my words. Maybe it is. I mean, history will tell. History will tell. It certainly looks like quite a big pop that we've seen. We've seen a little bit of a pop up, and we've yet to pop down too significantly yet. Right? This is all things considered a relatively minor dip. What was it? 12.5%, barely a correction. Right? Barely a correction. We were down there for part of a day until we moved up and closed the day green. Or closed the week green. But yeah, we'll see what happens with this one. I mean, we certainly could continue the dip down, right? Don't get me wrong. It's very possible that we could continue dipping down. I sure hope we don't. Part of me hopes that we do, right? Because then you just get these stocks even cheaper. And, it's just an opportunity to make more money over the long term, is my opinion on it. But good morning, Abstract. Welcome to the stream, man. We're going to pull up the market map real quick. Look at this thing. It's green as a flower, green as a blade of grass. Very green, right? Only Tesla and Comcast and Intel are down. Some semiconductor stocks aren't having the best day. But overall, pretty darn green day in the markets, and I'm not complaining, right? I love it when it's green, and I love it when it's red too, because that just means I get to grab up stocks for cheap, right? I think a lot of people make the mistake of pouring all their money into the markets all at once, and that's not necessarily a mistake from a returns perspective, right? Because studies have actually shown that a lot of the time you are better off. If there's a stock you want to buy, just buying all at once, whatever price it is, instead of averaging in. A lot of studies have shown that. But from a psychological perspective, I think it's very helpful to have some cash on the sidelines and to be able to buy up these dips, because it really helps alleviate your fear, right? Instead of having all of your assets and everything you've got in the market and you see everything dip 12% or more, right? If you're in more risky stocks, probably dip more than 12%. Then you've got other assets that you can maybe are going up in value, right? Maybe some, if you have real estate, maybe it's going up in value. If you have cash, well, now you can buy more shares of stock with the same amount of cash. So it's actually a potentially good situation for you. So all things considered, I think it really helps from a psychological perspective to have some cash on the sidelines, to not be all in all the time, even though that might, from a technical perspective, if you were a robot and you just didn't have any emotions and you could deal with it, it might be better off. You might be better off just throwing everything in all at once, at least as history has shown, right? And obviously, the history cannot be a indicator for future results or whatever. There's always some disclaimer that people have about past results cannot indicate future something. I don't know what it is, but there's some disclaimer that people give out. But overall, I'm happy to have some cash on the sidelines and to keep buying up these dips in stocks that I like, stocks that I think will perform even better than the markets, right? The markets, I'll admit, for the past many years, I've not been a big fan of just throwing money into the S&P, just because, I'll pull out the max. Boy, oh boy, did it ever just look high, right? And I've come to realize that maybe there's just enough cash in the system that this isn't high for how much cash there is. Maybe it's low. Maybe we've printed a whole lot more, and maybe people have got a whole lot more cash on the sidelines than we think. And maybe, the historical price to earnings ratios and whatnot don't make sense anymore because there's just so much more cash. And you can see that in the past, right? When big companies, if you look at, we can take a peek. Well, Microsoft's probably not. Let's pull up Procter Gamble, right? That's an old company, and we can't go back forever, right? And surely they've done stock splits and whatnot. I'm sure they've done stock splits. But if you look back in the past, stocks were, and we probably have to go back prior to the 80s, but I'm talking more so early 1900s. You were buying shares of stock for a couple of bucks, and now stocks are costing $160, and stocks like that would have been, obnoxious. And let's see if I can find I want Berkshire Hathaway. I forget exactly what the ticker symbol for Berkshire Hathaway is. So BRKB, I think, is the one that we want. Let's put a period in here. I think, there we go. So, no, that's not quite it. Come on, guys. Where's the one? It doesn't have the price. Well, here we go. Here we go. If we can pull up the daily chart on it, you'll see a crazy, crazy stock price. Maybe we got to pull up BRK. No. Here we go. Here we go. So look at this. This is Berkshire Hathaway Class A shares, right? So look at how expensive these trade for. This is Warren Buffett's company. 400, what is this? How many zeros is this? So I think it's $472,799 for a share of this. And you know, I've seen this. I've seen this the whole time I've been in the stock market. I've looked at Berkshire Hathaway's price, and I've always been confused as to why it was so high and why Warren Buffett didn't just do some stock splits and get it down there. I still don't know why he doesn't just split this thing and make it just a more reasonable price. I mean, look at this thing, $472,930 per share at Berkshire Hathaway. It's up 2% or $9,000 per share today. If you guys didn't know that, BRK/A is how you search for it. And, I mean, one day, this might not be a crazy normal price to see for stocks, right? If we keep seeing so much inflation, if we keep seeing it every year, people used to actually, this is something I was thinking about, and I'll be right back, guys. I'll show you exactly what I'm thinking about right here. I've got it. So hold on a second. All right, I'm back. So here's what I've got. I've got coins. I mean, who the heck uses these anymore? Nobody uses coins anymore because they're basically worthless. But way back in the day, this stuff, if we can show it to the camera, this used to be the money right here, right? People used to, a dollar used to be a big amount. You were scared to give your kids a dollar because they might spend all of it. You give them a penny or a nickel instead, and they'd use it to buy a hamburger. And nowadays, this stuff, it's useless. I mean, who knows what the next iteration is if we're just going to keep using, bigger and bigger dollar amounts to reflect how much inflation there is. But inflation's a real thing. I mean, this used to actually be money. Nobody uses this anymore. I mean, you've got it, and, it's just the annoying thing that you find in the bottom of your pocket or in your couch, and you don't even know where it came from. But, that's a perfect representation of how prices change over time and how people's views of what things are worth change over time, right? If someone from 200 years ago came to the modern day and looked at the price of a McDonald's hamburger, I mean, obviously McDonald's wasn't around 200 years ago, but, if they looked at the price of a loaf of bread, I mean, I'm sure it cost like 2 pennies 200 years ago. And nowadays they're looking at it, and a cheap loaf of bread is like $1.50. Now if you want a real loaf of bread that's not just made in a factory, you're paying $3 or $4 or $5 for it. So prices really have changed quite a bit, not just prices for, loaves of bread or cars or houses, stock prices as well. So we've printed a whole lot of money, and I think stock prices in terms of cash are going up, and that's something we've seen over the long term, right? We've seen these prices go way up, and, look at this. Over the past, from what is it, from 1993 to 2022, we've more than 10x'd, and just in the boring old S&P, and that's just holding through the crashes and everything. I mean, after all the crashes, we've 10x'd. So I think prices, they're on the way up. We've certainly printed a lot of money. For those of you who weren't in the stream earlier to see this, 80% of dollars printed in the last 22 months. Scary stuff. I don't think we're going down in terms of anything other than what the dollar is worth. I think everything's probably going up. Stock market, gold, silver, real estate, we've seen it happen already, used cars. So NJ says, blows my mind that people are still using change over a card or cash. Yeah, it's crazy. I mean, the reason I have cash is, sometimes you'll buy something with real, dollars and whatnot, and the price is like $5.32, and then they give you 60 cents of change, and I don't even want it. So I'll be right back. I'm gonna get rid of this because it's dirty. I'm gonna wash my hands too. And they always say to wash your hands after touching cash. I don't know why. Okay, we are back. We are back. So, the food at McDonald's will look the same after 200 years, says Silver. Yeah, so, hey, look at this. Look at this. It looks like somebody must have just used my referral link on Robinhood. So, let's see. I don't know if I'm supposed to show this, if I'm allowed to show myself claiming a free stock, but it looks like somebody just used my Robinhood referral link. So, if anyone else wants to use any referral links, they're in the description of the stream. But let's claim this free stock and see what it is. It's OPK, so it's worth $2.94. All right, so not the most expensive stock in the world, but there's a free $2.94. That can buy half a Big Mac now. So all things considered, not going to complain about that. I'm halfway to a Big Mac. I only need one more person to use the link, and then I can get some McDonald's for lunch. So, all right. And we're also looking at what was the other stock? SDC we had. SDC's doing pretty good. We're taking a peek at Tesla, which is now actually dipping below 900. I do want to peek at Sundial again real quick. So Sundial is maintaining some green, right? It hasn't moved red yet. It's up 0.5%, but it's not doing incredibly well, right? It really started tanking. I'll pull up this post that I put on the channel yesterday, and it really shows you what's going on in the markets, right? How people are treating the markets. So let me pull up the community section and pull up this picture. So we've got this. If anyone wants to view it, it's on my channel. But the market before and after Jerome Powell's press conference. So you saw the markets were very green. Pretty much everything was green. There were a couple flecks of red up here. But overall, things were green. And then after the fact, there was a lot of red, but a lot of the green that remained was in these larger market cap tech stocks. And a lot of the red that had flipped from green to red was in the smaller market cap stocks, right in the bottom right. It's like the further you go to the bottom right, the more consolidated red you see, right? There's some red in entertainment, actually. There's quite a bit right there. But overall, most of the red was in the smaller market cap stocks. And people are still just going along with this narrative that the smaller market cap stocks are trash. You got to sell them, and the only safe investments are those big market cap stocks. Now, surely there's some truth to it, right? Obviously, the big market cap stocks like Microsoft and Apple, they're not going anywhere. They're very safe investments, in my opinion. I don't think that anything could wipe off Microsoft from the face of the map anytime soon, right? They're a massive company. We're using them right now. I mean, we couldn't be doing this stream without Windows, at least not the way we're doing it, right? If Windows just ceased to exist right now, the stream would just blink out of existence. A lot of you guys wouldn't even have access to the internet or computers, right, at this moment. So Microsoft, Apple, Google, they all play a big part in our lives. Apple probably plays the smallest part in my life. I don't really use any Apple stuff, but I'm sure that a lot of people who are using Apple, I would no longer have the ability to communicate with. So it's affecting us. It's affecting us in some way. And, truth be told, some of the smaller market cap stocks, they're not out there as much, right? I'm not using their products and services, right? Because they're smaller, they're only operating in certain areas, and they're growing. So we'll see what happens over the long term, but I think that there are a lot of growth opportunities in those smaller market cap stocks, and oftentimes what you can see, even if those small market cap stocks don't become massive brand names in their own right, they can gain a lot of traction, and that creates the desire to buy them up by other, big companies, right? The big companies want to buy up those small market cap stocks, and whenever there's a buyout, they always pay pretty significantly above what the current share price is. So you end up making a bit on the buyout. So that's just my opinion. Now, it is 10 o'clock, so We'll be ending the stream a little bit early. It just happens to work a lot better with my schedule to end the streams at 10 while I'm finishing up this last semester of classes, because there is, unfortunately, quite a bit of work associated with it. So it does help out. So other than that, guys, we've got the stream for the day relatively green. I mean, I'm not looking at anything that was too red. I mean, the dollar's green, Sundial, SPY, SDC, everything's green. We never actually looked at cryptos today. Sorry, Abstract. We didn't quite get to it. But hopefully we'll see you guys in the stream tomorrow. And if you're on Rumble, feel free to hit that Rumble button and make sure to join us every morning at 9 that the market's open for the stream. So other than that, guys, have a great day.